Hello students. Today in this video, we'll discuss the first chapter of accountancy of class 11, Introduction to Accounting. Today in this video, we'll discuss the topic objectives of accounting. As an information system, the basic objective of accounting is to provide useful information to the interested groups of users, both external and internal. Now when you talk about accounting information system, the basic objective of accounting information system is to provide useful information to the different interested group of users like your creditors, management, government, research scholars, economists, workers, and so on, whether they are internal or external users. The necessary information, particularly in case of external user, is provided in the form of financial statements, with profit and loss account and balance sheet. Beside these, the management is provided with the additional information from time to time from the accounting records of business. Thus, the primary objective of accounting include the following. Now, if we talk about the information that will be provided to the external users of accounting information, that can be provided with the help of financial statements. Under that, we used to prepare trading account, profit and loss account, balance sheet, cash flow statements, and auditor's report. And with the help of these documents, or I could say with the help of the financial statements, the external users came to know about the financial position of the business, and they came to know about the profitability of the business. And business has to provide, or the accounting information has to provide, the relevant information and the necessary information to the different users from time to time. So in a nutshell, we can say the primary objective of accounting information includes the following. First, the maintenance of records of business transactions. Accounting is used for the maintenance of a systematic record of all financial transactions in the books of accounts. So when you talk about accounting, accounting is being used for maintaining of systematic record of all financial transactions in the books of accounts. Means here we are going to make the record of all those transactions which are related to the business, which can be valued in monetary terms in a chronological order. So we have to record each and every business transaction related to economic events. Even most brilliant executive or manager cannot accurately remember the numerous amount of varied transactions such as purchase, sale, receipts, payments, etc. that take place in business every day. So if we talk about the memory of an individual, so it's not possible for an individual to remember each and everything that occurs in the business and over a long period of time. So accounting helps to make a proper and complete record of all those business transactions, and they are kept regularly in a systematic order. So you can say the first objective of accounting is to make the proper maintenance of records of business transactions clear, and these accounting information that will be provided to you, or the information that you are going to get with the help of these record of business transaction, enables verifiability and act as an evidence in future reference. So in a nutshell, you can say the first objective of accounting is to maintain, or the maintenance of records of business transactions. Second, calculation of profit and loss. Now when you talk about any business activity, or if we talk about any business enterprise, we establish business enterprise with an aim to earn more and more profit. So with the help of the accounting information, or with the help of accounting, you can calculate the profit and loss of the business over a period of time, or even within an accounting period, because every business has been established to earn more and more profit. So thus you can say another objective of accounting is to ascertain the profit earned or the loss sustained by a business during an accounting period, which can be easily worked out with the help of record of incomes and expenses relating to the business by preparing a profit and loss account for the period. Now with the help of accounting, you can make out, or you can calculate the profit or loss of the business. Under accounting, we are going to record all the revenues of the business, and we are going to record all the expenses related to that revenue of that particular accounting period. Now, if your revenues of that particular accounting period will be more than the expenses related to that revenue, then you can say profit will be there in the business. And if your expenses related to the revenues are more than the particular revenue, then you can say loss will be there in the business. Like for example, if total revenue of a given period is 6 lakh and the total expenses for that particular revenue are 5,40,000, you can say there will be a profit of 60,000 because revenue exceeding your expenses. And if on the other hand, if your expenses exceeds your revenues, then you can say there will be loss in the business. Like for example, if your expenses for that particular accounting period is of 7 lakh and the revenue for that particular year is 6,70,000, so you can say there will be a loss of 30,000 rupees because your expenses are exceeding your revenues by 30,000 rupees. So the second aim of accounting is, or the second objective of accounting is to make the calculation of profit or loss of the business for that particular accounting period, because as we know, every business has been established with an aim to earn profit. So it is desirable to know the performance of the business in the forms of profit or loss. Third, the objective of accounting, you can say depiction of financial position. Accounting also aims at ascertaining the financial position of the business concern in the form of its assets and liabilities at the end of accounting period. A proper record of resources owned by the business organization, assets and claims against such resources liabilities facilitates the presentation of a statement known as balance sheet position statement. So the next objective of accounting is to depict the financial position of the business. Now when you talk about the financial position of the business can be ascertained with the help of the balance sheet. In balance sheet, on one hand, or you could say on the left hand side, we have liabilities, and on the right hand side we have our assets. Liabilities, as you know, these are the claims on the business, or these are the obligations that the business has to pay. And assets, as we know, these are the valuable things that are being owned by the business. So with the help of accounting, you will came to know about the financial position of the business, and this financial position you can ascertain in the form of assets and liabilities at the end of the accounting period. So at the end of the accounting period, we will came to know about the assets and the liabilities of the business, and with the help of that, we are going to came to know about the financial position of the business. The fourth objective of business accounting is providing accounting information to its users. As we know, the accounting information generated by the accounting process is communicated in the form of reports, statements, graphs and charts to the users who need it in different decision situations. As we know, when you talk about, we have already talked about the accounting process. Under that, we have seen that communication is the last step in the process of accounting system. So when you talk about communication, whatever accounting information that will be prepared, it must be reached to the user of it. At the time when it is being required by the different users, it must be communicated to them in the way they are required of. So there are two main users as we have already studied, internal and external. So accounting, the objective of accounting is to provide the relevant information to the different users. Like for example, if we talk about internal users like management, who needs timely information on cost of sales, profitability, etc. for planning, controlling and decision making. Like if we talk about management, they need the information, accounting information, so that they can make the financial policies for the business, so they can make rules and regulations for the organization, they can take decision regarding the cost of production and all. So they need the accounting information for such purpose. The same way, if we talk about external users who have limited authority, ability and resources to obtain the necessary information and have to rely on financial statement. If we talk about the external users, External users basically use to get the information with the help of financial statements and the reports that will be prepared by the business. So they take all the decisions relevant to the business with the help of this financial statement. So as an objective on accounting is to provide all the relevant information to its different users, whether internal users or external users. The external users are interested in the following. If you talk about the different, talk about the external users, they are interested like investors and potential investors. They need the information on the risk and returns on investment. For example, if you are an individual who has invested money in the business, so you will be interested in the financial or profitability of the business because you want to know about the return that you are going to get on your investment. Union and employee groups, if you talk about trade unions, if you talk about employees of the organization, because they know or they want to know about the stability of the business, they want to know about the profitability of the business, distribution of wealth within the business. If they will came to know that the profitability of the business is rising year by year, so they can ask for good salaries, they can ask for better technologies in the organization, they can ask for better working conditions. Clear? That's why they will be interested in the financial information of the business. Lenders and financial institutions, information on the credit worthiness of the company and its ability to repay loans and interest payments. If you talk about the lenders and financial institutions, yes, they will be interested in the accounting information because they want to know about the credit worthiness of the business, means whether the business is able to meet out the debts or not, whether the financial position of the business is sound so that they can make the repayment of the loans and the interest thereon. So they will be interested in the financial position and the profitability of the business and debt paying capacity of the business. Supplier and creditors, suppliers and the creditors, those who have given credit to the business or those who have supplied goods on credit to the business, they are also interested in the accounting information because they want to know about the paying back capacity of the business, after how long they are going to get their money back, is the business is going to repay their debts or not. Clear? And on the basis of such information, they can make a decision whether they have to continue with the business to give credit to them or not. So with the help of that, they can make the decision. Customers, yes, being a customer, you want to know about the profitability of the business because if business earns profit, they are going to make the regular supply of the goods in the market. They are going to give quality product at a reasonable price. They will get after sales services. So that's why the consumers are interested in the financial or the accounting information of the business. If we talk about government and other regulators, yes, they are also interested in the accounting information because governments has to formulate the trade and commerce policies for the country, and on the basis of the financial information or the accounting information of these business houses, it, it becomes easy for the government to make such policies regarding subsidies, tax, tariffs and all. Competitors, yes, even the competitors are also interested in the accounting information because with the help of that, the business used to know about its strength, its weaknesses regarding the competitors in the market. So with the help of that, they can set standards, they can make benchmark for the achievement of the set target. Clear? So even they can make out their standing in the market, or you could say about they all came to know about the market standing in the business, their edge, competitive edge, their strengths, their weaknesses. Clear? And basically, if you talk about competitors, if you have the accounting information of your competitors, so you can make competitive policies regarding your business. And being a competitor, the accounting information required by you is for the strategic purpose, like what kind of strategies can be formulated so that you can overcome your competitors, so you can lead your competitors in the market. So for such, competitors require the accounting information of the business houses. So in a nutshell, these are the objectives of the business and the different users who need the accounting information to make out the decisions as per their convenience. Thank you. Hope you like this video.